incredibly important point. And we find, based on the characteristics we look for dividend growth, which we think is the best way to get income over the next decade, that banks, in particular in the UK and in Europe, are structurally very challenged, and as you said, very difficult to understand what you're actually investing in. The previous economic moats, which they did have many decades ago, have just been eroded by many factors, including the shift to digital economy, where companies like Monzo and Revolut are just completely dismantling their once very robust economic moat. So, from many different perspectives, not only from the fact that they're very difficult to understand what you're actually investing in, to the fact that they're very structurally challenged moving forward. We just don't hold European or UK banks in the Global Dividend Fund for those particular reasons.
It's quite funny, isn't it, the lack of transparency that was cited by the CEO today, Ralph Hammers, the fact that they couldn't see what was the exposure at one point by the sounds of it. They didn't know what they were sitting on, which tells you the task then for the investor down the line. But when it comes to the way the company's come to market today, it sat on this news, it didn't bring it to the market until earnings day, hoping that a really decent report card might gloss over the fact that it was also trapped in Archegos, when every other bank came clean so far that we know of that had fairly significant exposures. What does it tell you about just how trustworthy the bank is? I mean, we've been hammering Credit Suisse over the same exposure, or over their exposure to this one prime brokerage, and they have taken all the questions, but investors still have concerns that there might be more skeletons in the closet. Shouldn't we be concerned about the bank that hasn't come clean straight up?
From my perspective, because we don't actually invest in this particular company or the group of cohort of companies in Europe or the UK, it's difficult to comment. But what I would say is that we have a high bar in terms of what we expect from management that are running the companies that we invest in. We expect owner-operator type managers. We expect them to be held to a certain level to account. And what I'm surprised about here is the fact that they didn't disclose this earlier. And it probably begs the question, is there wider issues involved within the company?
Storm, thank you for being a sport and taking all those questions today. Let me ask you about something more in your wheelhouse around dividends. And we just had a big update from BP today. Steve was asking Bernard Looney about the share buybacks, and we saw this big focus on that type of payout to shareholders versus, say, dividends. What do you make of the profile now of the oil and gas sector that have been huge payout champions in the past?
A number of really good questions today. BP, I think the results speak for themselves. They had a fantastic quarter, but look, they've got a very challenging decade ahead of them as society moves towards decarbonisation. Clearly, the CEO has pivoted the company in terms of its strategy going forward, but the proof is really going to be in the pudding in terms of how they execute. One thing that we haven't been a huge supporter of in the past is that companies that have a large amount of debt on their balance sheet buying back stock, particularly when they're in a structurally sort of challenged environment over the next 5 to 10 years in terms of demand. So it's great that they've managed to delever their balance sheet quite significantly, and it's great that they're looking forward into the future. But we saw from General Electric 5 years ago, when they brought back a lot of stock at $30 per share, and a number of their businesses were structurally challenged, and now the stock bottomed out below $5 a share. I think it's back above $10 now, but they have had to sell the crown jewels in terms of returning that business to somewhat a healthier position. So the one concern I have with BP in terms of it moving to buybacks is that it still has a lot of debt on its balance sheet in a very difficult sort of demand environment over the next decade.